All right, folks, let's get this started here. All right, so turn off the echo, make sure I'm all set. All right, this is Red Ben. You can get a hold of me on Twitter at Red Ben Trader. Make sure to follow me. And then if you want to learn more about the algo that we're looking at, it is based off the Trade and Perform algo, which was developed by my coach. In fact, the tool we're using today was introduced by Simon as well. I'm just kind of exploring like how else I might want to use it. If you want to see how Simon uses it in the trading room, we trade futures every day in the trading room. There is a cost to the trading room. You can talk to Simon about that, but you can get a 5-day free pass to the room if you email him and let him know that you watched my video and want to learn more. It's trade, the letter N, word perform at gmail.com. All right, that's all the marketing we'll be doing for this session. So, what we're looking for or looking at today primarily is this middle indicator here. For those who aren't familiar with my screens, I know it's busy and complicated. These are all the same information. This is just NQ. They're Renko charts. The size of the Renko bar can be found up here on all the windows. What we're going to be doing today, we're just going to be looking at one at a time. And if there was an easy way to turn off a lot of these signals and leave other ones, I would do it to simplify things. But it is kind of cumbersome to do that. So we're just going to have to ignore some of the colors and stuff like that. And who knows, maybe we'll see something else that's a pattern with those as well. But you don't have to know what any of this means to make sense of the indicator we're going to talk about. So just realize that. If you have Sierra charts, under studies, you can actually find up-down volume difference bars in the default studies that are available for anybody to use. So that in and of itself is just a free indicator. What it's showing us is the way I understand it anyway, is that it's basically a power indicator, because when you have volume that is coming in, like contracts being bought, either on an uptick or on the at the same price as the previous trade, but the one before that resulted in an uptick. So for instance, if we watch, if we watch the DOM and we watched it go up, like right there, that would give it a little, like a point to the up direction. When it goes down, that would give it a point to the down direction. But it's in contracts, not trades. So the more volume that you get going in either direction is going to push this indicator up or down. It is built like a candlestick. So the open is going to be at 0, similar to a candlestick. And then the high and the low is basically the distance of the candle is showing how much difference there was, the delta between the upticks and the downticks. It's very similar to something like a volume delta. It's there. The only difference is that it's giving us a little bit of extra information. The close, in effect, is the delta, but the high and the low is additional information that's in this indicator that's basically showing how much buying was there in the bar. Like at one time, this bar looked green and looked like it was going to close all the way up here, but it closed down here. And then at one point, it looked like it was going to be really, really heavy selling, but it gave back some of that by contracts being traded on upticks rather than either downticks or else the same level if it was followed by a downtick. So the math is not that important to understand that, but just know that that is what it's looking at. And like I said, conceptually, the way I think about it is it's a power indicator. It's showing me how much effort or how much power is being put into the range. Since they're Renko bars, it has nothing to do with time. The bar will close when price reaches a certain range away from the open, either in a up direction like this one or a down direction like this one. If you're not used to Renko, obviously this is going to be extra confusing then with all the extra colors and stuff. But just know that any bar with a wick on the top is always a bear bar, and any bar with a wick below is always a bull bar. So if that is really important to understand. I find Renko really useful. I've talked about it a bunch in different streams I've done. So if you want to learn more about Renko, just watch some more of my streams and you will. So yeah, the reason I call this a power indicator is when we get more volume going in the direction that price is going. So in other words, if we are building volume to the downside on downticks versus upticks as price is dropping, just like this, what it's telling us is there was more sell volume than buy volume, basically, or downtick. I'm going to call it sell. Obviously, there's a buyer and a seller for every trade, but when you look at the DOM, what we think about as selling is like aggressive selling. Someone what is it called? Like taking liquidity right off the book by market ordering to the sell side. So it's showing here hold on real quick. All right, hold on. I gotta fix this. That should do it. Okay. I turned it off anyway. I don't think you guys can hear those notifications. That's fine. So, but I'm gonna get distracted. So the what was I saying? Yeah. So the big one at the end, like this, or not at the beginning, basically says that we're building sell aggression or power as price drops, and the opposite would be true if we look at this little move here. So they got more and more buy volume or uptick volume as price increase. So you have to refer to what price is doing and relate it to what the indicators, which direction the indicator is going. That's super important to understand because, in my opinion, you can't just say, the biggest green candle is going to be like the like bullish or bearish. It's not that simple. We have to look at what was price doing at the time and how did price react to those aggressive buyers or aggressive sellers. So when we see the bar print, while it won't repaint, I've been watching this indicator for a while and it does not change once the bar closes. It will move when the bar is live. Like right now, if you watch this, if it starts to uptick, it'll get bigger, and if it starts to downtick significantly, it'll start to drop like that. So while the bar is live, you really can't use that information. But now that it's closed and we've started a new bar, this one will not change. So the important thing to understand and not get confused about is the big bars that occur live. We don't want to necessarily make decisions just because we got a big or a small green or red bar. Like that alone is not enough. You need to understand conceptually what's going on and where we are on the chart. And so that's why I have multiple time frames open with the same indicators on all of them, because the bigger the time frame or the Renko bar, the more significant they're going to be. Those levels are going to be that we're about to find. They're going to be more significant when we find them on a higher time frame than they are on a smaller time frame. But interestingly, because we want to manage risk appropriately, I can't just say, oh, there's a big red bar up at the top on a 40 tick, so I'm just going to sell, because I can't put a 40 tick stop on futures. That's just not going to work. And plus, if I zoom in here, and at that very moment, we are, where does that close? 21. So it's like here. So if I look at the smaller time frame here versus this one, I can clearly see that on a big picture we've moved up a lot, and someone like pushed aggressively with a lot of power at the highs here. That's significant. It looks threatening. But I then have to go in here to the smaller one if I wanted to make a decision on anything smaller than this size, which for me, like I said, I can only take maybe like 20 points of heat max. So to find my entry, I can't just market order here. I have to come in here and say, well, where was in that bar? Where was the volume? And now I can look and say, oh, okay, all the selling happened here. See how they got deeper and deeper red? And then I can look up here and see that there was a wick, right? So at one point during this bar, there was actually more aggressive buying than aggressive selling. And that's really, really critical to understand how useful that can be, because now in the future, if I want to be bearish, these guys in this wick, we'll say down to the open, but technically it's probably around the point of control, which is the little yellow dash, and those yellow dashes are connected by the yellow line. That's where most of the volume was done within the bar. Well, I should say the biggest trade was done by price at that price. So that's most likely where they got trapped, the buyers, because at one point it looked like they were going to potentially reverse it. They thought that they were going to get more buyers than sellers up there. So that likely sent more buyers to follow through. And they might even try it again on that next bar. And you can see here, I got the yellow dot, which if you're bearish is usually a good place to enter. But the location of that, it improves my odds significantly by seeing that the dot is located just above the point of control of that bar that used to be green but closed like heavier red than the previous one. So our expectation here, here, when this one prints, and especially when it's got a lot of volume, and then looking at the fact that that occurred after returning to these trap buyers and rejecting. Hopefully that makes sense. It's a little complicated, but if you can see that, you now have, and then you have the higher time frame confirming a bearish direction, especially when you see divergence here. See how price was increasing, but the delta, what I'll call delta, is decreasing, or the aggression of buyers was decreasing as price rose. So they got less and less aggressive buy volume as we rose in price, and then someone came in and aggressively sold it. And then if we look in here, we can see the same thing. We should know at this point that there is someone trapped, and that's usually a pretty good time to get into a trade. Or if you were long, you certainly want to be out there, which is what I ended up doing, because I was long previously and needed to trail out, and that became a pretty decent place to get out of the trade. Now, keep in mind, it does not mean that price is going to automatically come all the way down here. Just because we have trap buyers and aggressive sellers, we have to relate that to what's happened previously. And this indicator makes that relatively easy. But just because we have this sell signal here doesn't mean the entire trend is just going to flip. It's just not that simple. Markets will auction back to the locations that are important to the participants. And if you think about it, the places where traders got really aggressive, either buying or selling aggressively like this, they're going to tend to act like a magnet if you get momentum to that direction. So you can see they repeatedly tried to break back through. Again, this is the big delta, right? Where all the buyers here, let me just erase everything, I'll show you. So all of the buyers got trapped in this one, which was, we said, here. And then once this rejected, it was all selling. Why would that be? Well, when do people market sell? The number one time they do is when they get stopped out of longs. So that, and then also they market sell during breakdowns or momentum pivots is usually when you see a lot of that. So if that makes sense here, it's not a breakdown. We didn't have support over here really. We maybe had like a tiny micro support, but nothing on a higher time frame as far as I can see. We didn't break down. This might have been a previous low. So I suppose maybe that was related. Again, you always want to be here. We can check. You always want to be aware on higher time frames, whether or not hard to see with so many. Let's see. It's 34. Yeah, that might have been a previous support, but I wouldn't call it a breakdown per se. So that's not necessarily the reason that they all sold there. And so while that's a fine reason, there's no reason to, like, it's not a problem if it was a breakdown. But if I see that it's not a breakdown, then you have to look a little further and ask, like, well, why is there so much volume coming in here if there's not higher time frame traders looking at some line on their screen? What is it? And the most likely answer is there's a momentum shift, which usually happens when a big buyer like this gets beat. So that is going to be another, that's going to offer us opportunities, primarily, in my opinion, not on the breakdown, but on the retest when this rejects. So the idea, just to jump ahead a little bit, I will explain this more clearly soon with a bunch of examples. But one way to find a trade with basically just the up-down difference would be to look for a big delta. And like I said, I don't, most of these things you can switch directions with. So like I'm gonna make it. I might say things like you can sell after a big delta is beat. If that's the case, you can probably buy when a big delta when a big seller is beat too. So I don't want to like have to keep referring to both directions because I think that's confusing. But just know that most of these ideas will be like swappable. There might be little nuanced differences, but the theory should still work. But in particular, the big delta bars here that occur at the highs of a wave. And now when I say wave, I'm talking about a Weiss wave, not an Elliott wave. They're, I guess, maybe similar. I don't know much about Elliott waves, but when I say wave, I'm talking about these, which is where price continues in one direction with very gentle pullbacks, and it ends with the way we have it is it ends when you get two bars going in the opposite direction of the wave. So you can see here that will end this green wave. You won't know it's over until this one closes because you need two of the opposite direction. You can see here this orange bar, it went down one and then up again. And so on the Weiss waves, for a moment, this would look gray, but then at the very next bar, when this one closes bullish, it would flip back to green again. So you don't use these for a current trigger. You use them in retrospect to look back and say, what's happening and where are we relative to where this rotation began. And the reason it's building like this is there's more and more volume building inside of that wave. And so it's accumulated. So cumulative volume is what prints these little bars. So you can see when there's a big jump, see how most of these are relatively a 45-degree angle, more or less. Like not perfect, but relatively. And then all of a sudden you have one that spikes significantly over that. What that means is that this bar, the first gold one with the big wick here, this one here, that one had a lot of volume relative to the previous bars in this rotation or wave. And that should make sense because number one, it's a rather large bar. And so there was a lot of sellers in this bar before we close. And then number two, if you look at where it closed after this little pullback. So for instance, this one here has a wick and it closed bullish. It's significantly smaller, but the buyers aren't going to need that much volume normally to just continue the trend up. And in fact, if there's very little wick, we wouldn't expect much volume in it at all. And when we do have a lot of volume in there, that there's a reason for that. And we need to investigate what that might be. But just to be clear, none of these indicators are bar by bar volume. All of the like anything related to volume that I need to know when it comes to triggering trades is already calculated into the like colors and signals. So I don't need to watch like bar by bar volume and relate it. That's already coded into the algo. But if you want to see a really like obvious way where like if you're wondering like where's most of the volume in this wave, well, if you see a bar that's significantly higher than the last one and significantly higher than you'd expect based on like the slope of that wave, well, the one that breaks up like that has a lot of volume. But with just that indicator and with just standard volume, like I said, which is not on this chart, but integrated into other signals, with just that, you don't know for sure how that bar was built. Like if you look at a footprint, you can see each, at each price, how much selling and how much aggressive selling, how many like down tick moves and how many uptick moves are in there. So like if I looked at this exact spot on my Delta footprint, what we're going to see, it's this here. It's not Renko, it's volume based, so it's going to cover more than just one bar. It's basically this. But if I look in here and I refer to the previous up wave like this, that is that Weiss wave. And so you can see a lot of volume here and then not a lot of volume. A little pullback, very low volume, comes up here, and all of a sudden this bar right here gets a ton of volume here, here, and here. See that? But look at the lows. Very low volume. Well, average compared to what happened before. But what I see on the footprint is that this level at the first time they came up here, there was a significant amount of like delta here compared to like lower. But then once price went through it again, there was no interest anymore. So what that tells me is whoever was sitting here on the limit order book waiting to sell on the way up, they have finished. There's no longer resting orders there. And most likely, anybody who did get filled here on the sell, because down low here, there's no sign of aggression. There's no increase as we go down. I guess there's this. That's probably a stop out of some kind, but there's not a lot of activity down here. You can see there's lots of prices where there's literal illiquidity, like 0 or 1, where price just flipped right through it. Maybe there was one order on the order book, but if you would have market sold at like what is this, 15107, you might have gotten, like, if you had 10 contracts to sell, you'd get some slippage for sure. And so that's what we see here is basically someone slipping down, and then they filled 33 here, and note that it just never came back. So once these guys got filled, there was nobody underneath. And actually, since these are so aligned, this probably was not a stop order. This was probably a resting order that got filled. And then people saw that there was nobody coming in to follow it, and it lifted. And where did it lift to? Well, most of the volume happened up here and then higher. Very little volume back here. There's no longer any interest. So while you can interpret that in retrospect pretty clearly, I personally have a hard time seeing that in real time. Like if I tried to, well, I guess I don't want to leave, but because I want to demonstrate how this works on the algo, but I wouldn't have a clear picture of whether or not this is bullish or bearish if all I saw was this. I like it's not, it looks bullish from back here, but they are trying to attack it. So could this be the top? Could they be running out of steam? Like with just a footprint, you can see it if you know what to look for, but it's hard to interpret in real time if things are going fast. And if all you had was the Renko bars but no indicators, you could guess that it's probably going to go higher because trends usually continue. You could do that, but would you have any evidence that it's like not done? Like, could it be the high? You wouldn't know. But with well, you don't have any certainty ever. Your expectancy can be a little bit. There's more evidence to the bias when you can look at the up-down volume difference, because now I can see that while this bar here, the down bar, you can see that it had a lot of sellers in it. A lot more sellers than buyers participated here. A lot of people were market selling, or after a market sell, they were getting filled at the offer. So for that to happen, you obviously have to have some sell interest, but it doesn't make it bearish. What would make it bearish is if you continued lower from there and most of the volume on the wave up got overcome. We got under where most of the buyers got in. Then, if you've got increasing sell volume underneath the high buy volume, now you've gotten a momentum shifts. So in this case, we got, if you look at the POC, the yellow line, again, that's the price in the bar that got the most contracts bought or sold. So that did fall, but it did not fall below the low here. And it definitely did not take out the point of control of the previous bar. And if you look at volume difference, that previous bar here, this one with the arrow on it, had the most volume of this wave. See that? This wave started here because we had two down bars, and then up wave starts. The biggest volume is right there, the biggest volume in the wave. That becomes a critical level not to hold as a brick wall. You can trade back into it. In fact, it's going to act like a magnet, like I mentioned, because there's lots of, it's contested. There was lots of buy volume there, because it probably had a lot of limit sell orders on the order book. You can't get a big delta without having some sort of a fight, because otherwise you don't need all that volume. And yeah, it won't look like this. It can be green, but it won't be the biggest green, because this is saying there's, what's that level? So there is 140. Here, we can just see it exactly. It's like 150 or something. 145 more buy, more contracts bought on the uptick than the downtick. It's that's the difference, is what the close is telling me. And look, it closed at the highs, so it was never more different than that. And it's the biggest one of the wave. So there's obviously some interest there. It doesn't matter what the reason is. It could be a previous high. It could be a VPOC on the daily chart. It doesn't really matter. But we know that there was obviously people trading there. And so when we leave the area, whether it's up or down, our expectation should be that that interesting level, that level where everybody was participating, it should hold some value to someone. Someone was interested. A lot of people, more than anywhere else on this wave, were more willing to buy there, not just passively, but aggressively buy there. So there were obviously sellers there, and buyers won that battle. So the expectation should be that this level can be traded again, because it's got a lot of interest. But the way the auction works usually is it takes care of new business first, is what Jim Dalton explains it as. And so if you've got sellers getting steamrolled here and squeezed, even though there's a ton of volume here, and that's probably a place that the market wants to spend some time to like hash out exactly whether or not it would look the same if we approached it from above, just like it did when we approached it from below. We may not get that chance until we run into a bigger seller, or we exhaust a little bit on a very small micro time frame. But the expectation should be that that level gets retested. So we go a little higher. We even push VPOC above that high. And this bar doesn't have quite as big of a difference between the buyers and sellers. And then after that, we get a sell bar. So price closes down here, or it falls, 15 ticks from the open before it can get 15 ticks above the open. Now you can see this one had a big wick. And the way this works with Renko is this bar was here, and then price continues higher and then reversed. But when it prints the bar, it's not a standard candlestick. It doesn't put the open at the previous bar's close. It actually puts the open at the previous bar's open when it's a reversal bar like this. So even though the open is down here, if you watched this bar print in time, you're going to see that at the beginning of this bar's life, price was up here. It got up there, it got rejected, and went from the open 15 ticks down before it could get 15 ticks up from this one. So it would have had to go, see, because if it would have been a bull bar that printed, it would have opened at the previous bar's close. So it really didn't get anywhere near close on the upside, and then it came all the way back and closed as a down bar. So in other words, whoever was buying here aggressively that created these big delta bars, they're taking a break. They may be putting their orders lower. They may be done. We may be ran into a big heavy seller on the limit order book, and they decided to pull their buy orders. Well, I guess it's not buy orders. It's willingness to take liquidity out with a aggressive buy or a market buy. So that behavior stopped, or let's say paused. We don't know, just because it switched directions on either the delta or the Renko bar. We still don't know whether or not this is the end of the trend. But this is where we want to start paying attention to where we expect price to return to. And where is that? It's wherever the biggest delta was. And again, that was this bar. And generally, we know that the price with the most activity was the point of control. Oh, I missed that by like a tick. But it's that, I don't know how to move that down. There we go. So right there is where the yellow line meets that bar. And that's where most of the contracts were traded, in that bar. Now, not surprisingly, since it was such big delta, we're going to come back there and test it from above. Totally natural, normal auction behavior. This is not bearish, it's not bullish, it's just neutral. It's just what happens. What happens next will give us the opportunity for a imbalance, which is where the best trades usually come from. So the next attempt to let me get rid of that. I'll forget otherwise. So they try to push lower, right? They got a lot of delta, way bigger than this previous wick here, which is associated with this dot. So when price was down here, there was a moment where this bar looked like it was going to print with a red delta, but price rose. The Renko bar closed up here, and at that time, delta was significantly positive, and the result is we go higher. So here at this one, you can see we had a little bit of a moment where there were more buyers than sellers, probably at the very beginning of the bar. Like I said, when it started here, tried to go up, that's those buyers. And technically, they are potentially trapped on this time frame for a moment. But again, our expectation is that eventually, we don't know when, but eventually price needs to come back here, usually, and test those levels where the delta was so imbalanced, to see if that's still the case when we approach from the upside. So while they may be trapped up here for the time being, even though there's a big delta bar here that looks like a lot of selling, it is definitely compared to all of these, but realize that the last time we saw anything near this negative, this many people hitting the bid, the market sell button, we were here. And now we've gone higher, and we get a close with a low significantly lower than that wick. But note what happened earlier than that. This wick is very large. So at one point, I don't need these anymore. At one point here, look where the point of control was for that bar, way at the low. So at one point, a bunch of sellers, volume wise, came in there and tried to knock that down, but price continued higher. And eventually, by the time the bar closed, you can see we weren't at the very highs of bit of up down difference, but the delta was far more positive than negative. But the wick is actually bigger than the body. That's going to be significant. That bar is going to be significant as a result, because what that means is that the sellers down here who tried to fight this move, they got trapped. And not just a little trapped, they got super trapped and probably squeezed out. But one way or another, there were significant sellers down there. We have a point of control near the low and a really big wick or a really big negative delta. So the low on this bar is significantly lower than it's been previously, with the exception of this bar, which is actually the biggest delta we've seen for an hour or more since, yeah, like 11 o'clock central. We had not seen as much sell aggression or power as then we saw right here. So this one back here, there were a ton of sellers. Where did that happen? It happened right at resistance. This blue was a previous day's point of control. I think it was Thursday, maybe, or Friday. I think it was Thursday. So they tried to defend it aggressively. You can get the star here from the trade and perform algo. And then plus we have ring followed by red triangle down, which is also a pretty aggressive move. So, and then the huge delta means that almost, and I mean, the wick was kind of tall too. So in this tiny little time frame, if you zoomed into this bar, you would see buyers getting trapped and a bunch of sellers getting in down there. Should be bearish, but nope. They tried to go lower. The sellers exhausted. They weren't able to get anything near that level of delta. And as a result, we came back through the point of control, which again is natural, totally normal. Even if it's bearish, that retracement's normal. But we closed higher, and the diamond says that we did it fast. And not surprisingly, we get illiquidity, which is the pink, and then we break to a new high. They try to defend, but you can see the delta here was very weak. And at one point, there was a ton of buyers in this bar. So buyers need to hold this, otherwise it's in big trouble. But there was, compared to the people who are trapped down here, there's barely any sellers here. And so they probably don't have too much trouble defending this, and they do. And here's that bar with the big wick that we were talking about before, and you can hopefully start to see that when you have a big relative to previous ones, a really big delta, and then the price goes in the opposite direction of that delta, then again, naturally, we return to that delta's POC, the bar in bar POC, and if we're bullish, what we want to see is a nice wick there that is smaller than this, or a red bar that's smaller than this, followed by bullish aggression, like a star or a diamond or whatever else you use to identify on the footprint that there was a fight for a price that was won by bulls. Here, having once again, like I said before, the POC so close to this low like this and below this one, the one with all the aggression. There's that POC. POC went down, price went up, and it's bullish. So that's going to be our continuation signal, more or less, is get a big seller, have someone try to defend that level when buyers show up and fail to defend it, meaning it goes higher. And then what we really want to see, if you're bullish, is more delta coming in, more buyers that aggressively than sellers, because that means that these sellers are probably stopping out. They are market buying, whereas before they were market selling. Now, it is a little bit vulnerable to getting reversed when you get that big move up like that. And the difference in this bar's high and this bar's high, especially when there was a wick here, that big jump can sometimes lead to a pullback if you're not squeezing. In this case, we're breaking out. So that's exactly what we want to see. We want to see volume increase, delta increase to the upside, and we really don't want to see wicks here on the biggest bars. So like this, that is ideal. The one with the high can have a wick, but the rest of them, we don't want the wick, because the wick is a potential trap. It just hasn't triggered yet until you get under that bar with volume. You have to actually develop volume below it. So again, we're back to where we were. And the important thing to understand here, and that I think a lot of traders, they know it, but they don't know how to apply it. We have trapped sellers. We have identified it. They are here. In fact, we could actually say that they started to get squeezed. Probably, where's the big delta? Up there. So above this POC, it's just a squeeze. And in fact, you can say that the body of a star is very similar to a pink bar. If you've watched my other videos, that'll make sense. If it doesn't, just ignore it. But this is a classic squeeze. And then getting the white bar above the pink bar is critical for continuation. In addition, getting delta to continue higher than the pink bars, I think it's close, but it could be high, but I'm pretty sure it's close, is also critical. Again, this is a new tool, and we're going to learn as we go here. So here's now the biggest delta right here. This one, the one before the arrow. The arrow's not related to this. If I could turn it down off, I would, but it's a lot of work to go hide everything, so we'll just have to ignore it for now. Like I said, unless we happen to see a pattern with it. But so the big volume is here. The big delta, I mean, is here. They try to fight it, right? We see the exact same thing as here, basically. Big delta to the downside, right here. Were they able to get volume, the yellow line, develop below the big delta? No. When they did get to the low of the big delta, we got buyers showing up. Note how the POC dropped. So a lot more buyers and sellers, but a lot more trades happen down here at the low compared to anywhere else in the bar. And that level is lower than where it was in the previous bar. It's lower than where it was in the last 3 bars. So if it would have rolled over there, it's probably finished. But instead, sellers gave up, which is what pink means. So there was suddenly some illiquidity in the order book. someone grabbed a bunch of orders and people pulled their sell orders, and as price increased they continued to pull their seller orders, and so they didn't need a lot of volume to push up here, but they got a lot of movement, which is the last thing you want to see like this. If you're selling, if you sold this, the last thing you want to see is volume going lower, developing volume below your entry. Again, most of the people in this bar sold at that dash. So for a minute, they think they're on sides and they see more volume coming in. The wick is probably, this is red. The delta's red. It looks like they're building aggression to the sell side. Then suddenly people start pulling their sell orders, buyers come in, and everybody who was ready to defend this gave up. And you can see the star and the blue dot. The star meaning that there's an aggressive buyer down there, which probably flipped the market. And then you also have the dot, which tells me that there was a shift in like who was. It's, how can I explain it? It's like it's a shift in volume. I'm not going to go into it. If you want to learn more about any of my signals, they take a long time to develop. And so if you want to spend some time learning about it, just look through my old live streams. I've dug into all of them and explained how they relate to the other signals and stuff like that. So if you want to learn more, you just got to spend some time on my YouTube. So we get the squeeze, and look how they try to fight back, but they can't get to where all the volume was. And look at this. It's like zero, right? At one point, it was very bear delta, and at one point, it was very bullish delta. But by the time we close, it was basically even, right? So for a time, it looked like sellers were going to turn this, even though they got squeezed. But eventually, buyers came in. And interestingly, at the close, there actually was an even number, more or less, of buys, aggressive buys versus aggressive sells, yet price is going up. So as this is going up, they are likely either getting it very easily, kind of like the pink bar, like they didn't have to work very hard for this last 4 points or whatever, and the selling was probably really heavy. Otherwise, you wouldn't have had a wick up here, and this one's bigger than the previous bar, which again we know is dangerous if you can't put more volume in. It's also gold, which I've talked about, which it basically in a different in many different streams, but it basically says that price is so far from fair value that like these guys know that they're overpaying for this, but they're doing it, they're buying anyway, basically because they're buying with momentum. So they have the intention of buying high and selling high. And if you can get under those guys, sometimes you can get pretty big moves. So, but if we continue with the delta, buyers need to demonstrate that they have power to continue this move. And to do that, what they really need to do is push above that wick. Otherwise, sellers are going to start like nibbling at them and see if they give up. So you can see they tried here. Sellers tried, but they couldn't. They got trapped. That's what that means, basically. All the hammer says that for the moment, right here, they got trapped. They probably released because this bar was printed without making a bigger delta, which we're going to explain. I'm going to explain why I believe that's actually very critical for finding trades. But they tried to go higher, and the result was there weren't very many buyers. You can see here at one time this delta was positive, but nowhere near what we've gotten before. In fact, it's even below the last time we squeezed. So this one, we said, was basically just a little squeeze because they got all the sellers got trapped trying to fight this move, and they got squeezed out. You don't need a lot of volume to do that. They just let go. As soon as they see price isn't going down, they don't want anything to do with it. And look at how many people tried to aggressively sell. There's a lot of steam to get burned off here. Well, they do that, and you can see here they went up in close compared to this close, but they did not make a higher high. And they definitely didn't go as high as these ones. Uh-oh. Did I lose my connection? Let's see. I just had a warning on my Ninja that I lost my connection. Let's double check. Hold on. Oh, no, we're good. Okay, sorry. If I do drop out, someone tell me on Twitter or something. Okay, so in other words, price is increasing. They attempted to fight back. The sellers attempted to fight back. This is exactly the same in the other direction, though. They attempted to fight back. They gave up. Price continued higher. But delta went lower. It actually peaked on the one with the white line here. Okay. So that was the peak delta, but it was not peak price. Price actually continued higher than where we were when there was the biggest difference between buyers and sellers. Sellers tried to attack, they gave up, and we went higher in price, but not in delta. You can see on this one, there was sort of another attempt to squeeze out. So they attacked in the wick. The sellers attacked and then gave up, it appears, and let the bar close bullish at the new highs. And you can see that low was not as low as this one and this one and this one and this one. It wasn't a very powerful push, but someone tried to fight this off and gave up, basically pushing price higher. And that capitulation basically doesn't get a lot of delta. It probably doesn't get a lot of volume either. But the result here is you have delta divergence. You're going higher in price, yet lower in delta. I'm finding that this is especially relevant when you had a pink bar or a purple bar in the other direction that had heavy delta and a non-pink bar that had the divergent delta. That two bar combo, if it's followed by a sell bar like this, that actually might be worth coding, and I may do that and put like a signal here that says we had a big delta pink bar, we went higher, but the delta was lower than the pink bar, and then we closed a bar lower than that. Now interestingly, we do get an arrow here, similar to this one, so a likely momentum shift is occurring, and while this one didn't produce much, it looks like this one, if I had to guess, would produce much more. We also see the VPOC, which I've talked about, the developing VPOC. It used to be down here, the dotted line, and it shifted up on this down bar. And look where it shifted to, way above where all of this fight occurred, this hammer and the wick here. Volume developed above that, yet price went lower. And if you look here, we had a wick. So up here, it looked like we were going to grow another positive delta bar, but no, it went lower. And look how low it is. It's lower than this one, and I think it's lower than the one to the left too. Let's see. Wow, it's really low. 176 compared to 164. It's the biggest negative delta that we've had for at least 3 waves. So what that basically means is that there were significantly more aggressive sellers here than buyers. And again, normally that's not enough to get involved in the at all. But if we look at the context, we have the VPOC of the bar above the previous bar. That shouldn't happen necessarily if it's bullish, unless we have a lot of gas left in the tank. Well, do we have any evidence that we are running on fumes? We do. We have divergent delta, price rising, delta decreasing. And so that, and then also pink for me, pink bar with a lot of delta, followed by a white bar with a big wick to the downside, but not that much delta. So an attempted fight back, but the resulting up bar move, this aggressive move up, it didn't require a lot of buying to do that. The sellers that were sitting here after this push down, they probably pulled their orders for a moment and then came back in and sold it off. In other words, I would expect this bar to be pink, but it's not. From a delta perspective, it looks like it should be pink, but volume wise, it's not. So there was actually plenty of volume in this bar, and price was moving in here for more reasons than just illiquidity, unlike the pink one before it. In here, the bar closed with like real buying, not just illiquidity, but not this one. This one was just illiquidity, attempt to attack by sellers. They fought them off, went a little higher, but they didn't get as much delta. Probably because there was some fight here versus this one. But then if there was no fight here in this pink bar, why is delta so massive? And that, I believe, is because of this and this. We had sellers in here that gave up. So this had no wick at all. This had no wick either. Right? You never during this bar did sellers think or try to take control. At this point, everyone's getting squeezed and giving up if you're a bearish. Whereas with this bar, there was a time inside the bar where they thought, I might actually get something out of this. And then we still went up 15 ticks anyway. And then when we went a little higher, sellers were like, you know what? I'm done with this. Or I'm not putting up with it anymore. I'm going to go in there and aggressively sell this down. And so buyers had a small wick. Sellers have a huge delta. So the result of that is some giving up by buyers. Buyers in this bar gave up. It was purple. People on the order book decided to pull their orders, causing illiquidity, which led to price dropping at least 15 ticks. So price drops, Buyers are like, I wanted to be a buyer down here when I saw price up here, but now that it's actually come back to my price, maybe I'm not so interested anymore. Again, this looks bearish. If it doesn't, it probably should. But it's still not time to sell yet, in my opinion, because the biggest delta where all of the buyers were is down here. That's where all the buyers were. In fact, these two bars had most buyers compared to any of this, right? We had divergence. Delta divergence is clearly there. That's not bearish. It's bearish divergence, but it doesn't always mean reversal. What it usually does mean is at least a pause in the move up. It can be a reversal, but in my opinion, alone, it's not enough to sell. It is a good reason to be watching that level, though, because if buyers don't show up here, then sellers are going to have an easier time. But for now, what I was showing with this big volume delta is because we are above this in price, unless you can target this area, selling just doesn't make a lot of sense to me, because the sellers who sold here got absolutely devastated. They got totally squeezed out. So some of them probably are still short. And when we come back into those levels, those previous sellers from here become like forced buyers. They don't want to risk price going back up again. And so they buy, even though they're bearish back here. They are sort of forced to buy as price returns to their sell entries because they don't want to lose. They got squeezed, and psychologically, when you have an opportunity to exit back at break even, people usually do it. So if you had a big delta and price continued in that direction, so big bullish delta, price goes higher, then divergence, delta divergence, and return to that price where the big delta was, this is the move that we want to watch closely. What would be normal, if it's still bullish, would be price to come down here, test probably this VPOC or that VPOC. We can mark them. So at least down to here, where most of the delta was, and we should see them defend that if it's bullish. So they come down. Oh, they can't even get into that bar, and they bounce. So look at how much selling aggression was put in here, right? Remember that? That's the biggest. This here is the biggest delta to the sell side that we've seen in a while, this one. And it was followed by a purple bar with awfully big delta for a purple bar. Usually pink and purple, they don't have a lot of volume usually, so you wouldn't expect them to have a huge delta. They can definitely, they should have the delta in the same direction as the price goes, but you don't expect to be this different because there's just not usually that much volume in there. It's just traders giving up. So when you have that, and now we're fighting back, well, I don't want to be a seller. If I sold this, I don't want to be a seller anymore if they can't even take back or at least test this level where the VPOC was when the delta was so high to the upside. It's just, it doesn't make much sense to me. Again, unless that's my target, it doesn't make sense to me to sell here or here. So when they come down in there and they bounce, if I did sell here for some reason, I'm giving up too, just like the people in this pink bar. That's sellers giving up, and the green outline means that at the near the low there were trap sellers in there. And usually that means if price comes down there again, we're going to get this same move on a micro fractal. You're going to see the price go under this low and usually get bought up. That's what you expect on a green bar. Now the red outline is exactly the opposite. So on the red, we would expect, if it's bearish, that sellers defend this when price tests above it. We'll see. So we get a bar that closes bullish but has huge negative delta. So delta divergence on the bar, not the wave like this, but the bar itself is divergent, meaning that at the time of the close, there were actually more aggressive sellers than aggressive buyers in this bar. So the amount of selling that happened in the wick was bigger than the amount of buying that happened into the close. It may have done some buying earlier, but by the time it closed, like see this, that's the buying. That's this high. At one point, it was that different to the upside. But by the time it closed, most of the traders in here did their business at the bid. So what should we expect now? Well, if they did most of their business at the bid, what's going to happen if price goes higher? They're probably going to get squeezed, right? So sellers basically need to react here. Otherwise, we're going to go another leg up. So in my opinion, this is a dangerous bar to buy when you have a triangle that's divergent like this. If it was at that old resistance, new support, it might be a sweet spot to buy. But usually I want to see them print another bull bar. And by the time they've done that, we're going to be up at a new high. And I'd have to have another big delta to the upside to think that it's time to buy a breakout. So here you can see the last time we broke out and closed bullish, our highest delta was here. And the delta, when it was bullish, did not overcome that. It may have overcome, nope, not that one either. The high is 104 and the high here was 105. So at this point, you don't know that there's more buying than we had back here. So I would be cautious. Bullish, but cautious. Okay, we get a pink bar. No wick. Huge delta. Right? Everybody's giving up again. It's just like, where's the other one? This one. Just like that. Except that we've now gotten more delta than a wick behind us, just like this, I guess. So we should expect higher. But we've also gotten more delta than we had when we pushed to the high. And what that means is we have repaired the delta divergence of the wave. So remember, delta was highest here. We got some divergence. That caused a pullback. It brought in a bunch of sellers. Well, now they've pushed volume delta up again. So the only issue with this is that it's pink, meaning that primarily we're going up because sellers are pulling their orders. It's unusual, and I have to look into it, but possibly foreshadowing here that we have such a big delta at the highs on a pink bar. I think it's okay as long as you get more delta coming soon, but I'm curious if you get delta divergence again at this point. Like here, you had the pink bar not being the biggest delta. Then we had delta divergence and some consolidation. Now we have big delta on a pink bar. So I'm curious, if you get delta divergence now on the wave, is it that much harder to repair because the only way they got this delta was with sellers giving up. And if there's divergence, sellers ain't giving up. So we get a little bit higher, but note we never got bigger delta than the pink one. Then they put in a huge sell delta. So sellers are doing what sellers do. They tried to sell here, it didn't work, they bounced off this, we come up, we test above this high. Since it's red, we should expect them to try to sell it again. That's just the way those red bars usually work. The traps are usually triggered. They don't always continue lower, but they usually try. But remember, this green one has one too. So if it gets under here, we should expect them to defend that. So not surprisingly, they defended this. They tried to break down. It took them a lot of delta, and at no time were buyers ever higher delta than this pink bar. Okay. Then we get a retracement. Oh, the other thing to notice here, remember this huge delta, the one that's the biggest? I said that it's very natural for that VPOC to get retested. Well, that has happened. We've gotten a retest and they tried to reject. So that would have been very natural if it's bearish to give up, to have buyers give up there. One of the trade entries that I'm eventually going to get to here that I've been using, I used today pretty well. Here, I'll show you if it's still there. I made 21.95 in the I only traded the evals today. I didn't trade my PAs, the performance accounts. So this is actually like paper money, unfortunately, but it pushes me towards having more performance accounts. But because I'm using a new idea, I'm not going to do that with the performance account quite yet. I need consistent data that it actually works. Today it did, but we'll have to see if it works a lot for me to add it to my repertoire of things that I'll use my PA for. I could have taken my regular trade entries that have already been proven in the PA, but I was kind of so focused on this that I missed them. They did set up, I missed them, but so here I was going to give one of the trade entries. So to be a seller here, what I'm finding is the highest odds entry is get a big delta to the downside, get above it, then reclaim that bar with VPOC. So I need the yellow line to now drop underneath this low, the white line. And if I can get the VPOC, the yellow line, to get down here on a bearish close, preferably that's not purple. I haven't sussed that out yet, whether or not that's necessary, but for now, I'm going to say it needs to get down there without being purple. Once that's happened, I can be bearish. I'm not sure if it's smart just to immediately sell that trigger or if I should wait for a dot or a star. We're going to look into that. But that is, so far, the number one trade that seems to work extremely often is what I'm calling the reclaim. And we've seen that with other indicators that if you sell the first time when it first shows up, you get smoked. But if you wait and they retake that or reclaim it, it's actually a pretty consistent opportunity. They just don't show up as much as selling the big delta. Now, another potential entry that is kind of similar to what Simon is doing in the room. I'm not going to deeply explain what the trade and perform entry is, because if you want to know that, just get a free pass to the room and listen to Simon explain it. The last thing I want to do is
explain it wrong and then like have to come back and fix it. Like Simon knows how that works, and if you want to see how that works, just get a pass to the room and he explains it in there. So, but something kind of similar to that is once you've gotten this big red cell, um, if you can leave it behind, like this, so you get big cell, they try to continue, and then in my experience, the blue dot is good, but if you can leave that level behind with a triangle, you can get continuation. It's more of a continuation trade than a reversal. And like I said, that is different than the trade and perform entry. I don't want to confuse anybody who's getting coached by Simon. Like I said, I'll let Simon coach the T and P entries. These are just my own variations on the same tool. So, like I said, what I see is when I have a big seller, but it's bullish. If they try to continue, but we hold that level, especially with a blue dot, the triangle here can be bought. Now here we had divergence, so I don't know with bearish divergence if that's a good idea, but it does work sometimes. I just will have to look into it. So again, here we have a big delta. So technically, I'm getting a blue dot after a big delta, and it's bullish. So a triangle up technically would be a continuation entry. And we don't get a triangle. Okay. I expected one, but we didn't get a triangle here. Okay. Well, no buy then. So the only thing we can do here is wait for the sell order to come after getting the yellow line underneath this white. I'm not sure why the triangle didn't come. Whatever. It doesn't matter. But we made a new high, did we not? And we have less delta and a really big wick. So I don't know if I'd want to buy this anyway. It might be problematic. Let's see. Oh, there we go. Maybe it was just because it was pink. So perhaps that's just fine as long as it's pink. And you know what? It's not divergence until we get a bearish bar. So at this point, now we've gotten pink with a big wick, followed by increasing delta. Interesting that we had another wick. So more sellers coming in here, but buyers overpowered them. And more buyers than sellers because it's green. But for a time, there were more sellers than buyers. But note, our biggest delta is still back here. But then there was a big one here at the yellow, at the pink. So I'm wondering if we came down here now and then reclaim the pink, does that work as well as a continuation? I don't know. Okay, huge delta. Is that the biggest one all day? Yep. Biggest one from this wave. But it's pink. Usually, now it's not a reason to sell. It's just like, it makes me wonder, why do they have to work so hard? Not surprisingly, they attack. So, and like I said, we saw that here too. Big delta on the pink. They try to go higher. They attack. Big delta on pink. They try to go higher. They attack. Now this delta, not so impressive, right? So I just wait. Oh wow, bigger delta. Yeah, so that's bullish. I don't know how else to explain that. But that is just, there were sellers, now there's all buyers. This triangle might be able to be bought. Interesting. Okay. So this one had lower delta. This one, does it have more or less? More. Not as much as the high, but more than the close. And yet it's pink. So increasing delta, pink bar. Every other time this happens, we get an attack. that attack usually gets fended off. We have the biggest delta here. So if we get under him and then get back up to this, it's a buy. But if we had the biggest sell delta back here. So if we come all the way down and reclaim it, it's a sell. All right. We get star down, red. And and notice this was red. We got behind it. They defended. Pretty normal. Okay, they get a star triangle down is pretty strong. Oh, is that the biggest delta? This is a very large delta. For, yeah. 168. What was this one? 170 something? Yeah, so not the biggest, but bigger than all these. Suddenly we get way more sellers than buyers. And look how weak that wick was. So we had the biggest delta that we've seen in the entire wave. In fact, in the last two waves. Followed by sellers giving up, basically, because zero, no, well, I guess they tried, but they didn't need to work very hard for these last 8 points or whatever. Sellers just kind of gave up after this big delta, and I was giving up too. I was thinking like, well, if we're making bigger delta, we're obviously going higher. When that doesn't happen, we should get nervous, and that relates to the trade and perform entry. Then big delta on the triangle. Buyers begin to give up. That makes sense. Smaller delta is probably healthy. Note we're getting smaller and smaller here on the buys. We were here, then the highest here, then the highest here. Now we have like never in this bar were there more buyers than sellers. Ah, interesting. They try to defend. So here is that trap. Remember in the very beginning of the video, I showed that potential sell where you had people trapped and then they came back and tested it and retraced. So this is the biggest delta that we've had in like 2 waves or more. That VPOC usually gets a retrace just naturally because it had so much volume and so much the difference between people buying aggressively and people selling aggressively being so huge makes the auction want to come back and test it and make sure that buyers are still overpowering sellers, especially after trading under it. Now we know that if I can get under it and then retrace it and put a blue dot in, especially blue dot followed by triangle, it's usually a continuation. We saw that. Where was that one? Did we just never get there? This one. This one here had a ton of delta. We retraced through the point of control, got a blue dot and a triangle up and a star triangle up. And that was a pretty good spot to be bullish. So here we've retraced, this one. Where is it? No, not that one. This one. We've gotten underneath the big delta. We retraced to the VPOC of the big delta. If this bar had a blue dot and then the next bar had triangle up, or if this bar had a star and the next bar is triangle up, it's probably continuation. But that's not what happened. Instead, we got a huge, the biggest we've seen forever, delta sell with the wick that was bigger than a green delta at the high. This is, I believe, very bearish because at a time during this bar, the buyers had bigger delta than they had at the highs. Yet at the close, we had a bigger difference here in sellers versus buyers than we've had the whole way up. So, and we're closing below the biggest buy delta. So, from my point of view, it's bearish. And the only thing that's going to change my mind about that is if we came back up and put VPOC above that high. Now we need the reversal to change my mind. So I'm going to move this to here. And as you can see, we can't even reach it with price. But if we get the yellow line back above that on a bull bar, it can squeeze again. Other than that, bearish. Also notice developing VPOC, which was hanging out very comfortably over here. We talked about this entry like last week, but bar that's not pink, pink above, come back, test it, blue dot. That's usually a pretty good buy if it's bullish. Well, that VPOC, developing VPOC, has shifted up. If it's bullish, we know to expect buying here. We got it, but then they close bearish. Also, not good for buyers. So now, all of these guys, including the biggest delta we had in this huge wave, is trapped. So I want to short this. The question is, and the reason why I'm doing the video, is I want to know when that is a good idea. Should I do it before this bar closes, as soon as it rejects? Do I have to wait for the bar to close? Do I have to wait for a retrace? What usually happens? And again, the conditions are huge delta near the high of a wave, and then get preferably divergence, but otherwise get under it, get under the price of that, come back up, try to reclaim it, and get a wick, preferably that's bigger than like where it was at the highs, and then a rejection that's significant. Now, I assume if we break above this, it's probably going to go higher, right? So I can put my stop, I think, like right there. I'm pretty sure. I just don't know what the perfect place to get short is. And my guess is any yellow dot, any star, any diamond they're probably all sellable. But I'm curious what happens with delta in this situation, because what I know is that if I'm going for a reversal and I think this is the high and I want a move with a lot of power and the chance to retrace a lot of points, I need delta to increase as price drops. It's okay if it retraces and delta decreases, and it's obviously okay to have like one bar that's small or whatever, especially if it's purple. But I'm curious what happens when you put in an even like a huge delta, negative 400. Like that's literally bigger than the entire day. Like, does that mean that I'm on the right track? Does that mean that I can move my stop down there? Like, what happens next? And we can look at the other time frames and see what happened there. But what happens next? Purple, nice retracement in delta. Eventually, you're going to need that. Okay. Oh, this makes sense. So, not surprisingly, the big delta, the auction doesn't like just leaving that behind, right? We should see them retrace and test that VPOC. They might even come and retrace the top or the developing point of control at that time. I'm not sure. But look at delta. They trap some sellers and push really hard, harder than they did at the top. But look where they are in price. They're at this hopeful support. So if this fails, it's probably like more bearish. Yeah. So I'm wondering if you can just short this or if you have to wait for a triangle down. I don't know. Okay. They get a divergent bar with an X. You don't want to see that if you're a seller. But look, weak delta. Ah, interesting. Another dot. But less delta. And it's red, so they should defend behind it. Maybe that's an okay place to sell. Ah, increasing delta into the support. Cool. Remember, this bar was the biggest delta before. And I had said that it makes sense to short if we get VPOC below it. Well, we got a new bigger delta and got VPOC below it here after retesting it. We never retraced it completely, but we came up, we retested it, got a yellow dot. That's the most aggressive sell, clearly. And then I'm wondering, even though this is less delta than this, so it's technically divergent, is it possibly okay because we are... Do we have less delta than that? What about this one? Ah, about the same. So I wonder if we need more delta than the one we're trapping. Or reclaiming. Not trapping. We're reclaiming this one. So is it the wave that needs to be as big or the individual delta? I'm not sure yet. But clearly we're bearish, right? That should be pretty clear. This guy got ultimately trapped. We moved developing volume, point of control. We moved it down in a purple. We retrace. We get a yellow dot. That alone is bearish. Usually if you get a triangle down here, it's clear short. I don't see a triangle though, so let's see. Do we go down anyway? Okay, they try to reclaim this, but they get VPOC down there, and we get a bull bar. It might not be ready. This is a bigger delta than this, but not bare. Look at this wick. A ton of buyers potentially trapped right here. They're going to need to reclaim that. And they do. Okay, so buyers reclaim this, threatening to trap this one. And did they trap it? No. They did not get VPOC above this one. And delta decreased. Am I bullish? Not really. I'm thinking we're probably retracing. They're trying to get back to this and this, the bigger deltas. Which one's bigger of those two? This one. So if they get VPOC above this, it might squeeze. But we have this big delta to like contend with. So that should get defended. So I don't know why you'd buy here. Because you have no risk reward. And you kind of have to put your stop down here where the wick is, thinking that like they got trapped. Let's see what happens. I really don't know. Okay, so this did trap that. So again, you have resistance right above you. Is that a problem? Yes. Good. Because that makes sense to me. Okay. So we can't just say find the biggest delta in either direction of a wave, get behind it, and reclaim it with VPOC, and then immediately buy. Because then you're going to get smashed since you had an even bigger delta to the opposite side that was unable to get retraced. So that is a little confusing, but it means we have to be aware of which side has the most delta. Almost like a cumulative... I could use another indicator, I guess. There is a cumulative delta indicator. But what I'm thinking is this volume zone oscillator probably is the same thing. Enough of the same thing. It's close enough. So here we are bearish on the volume zone oscillator, rejecting against that important level. And price could not get VPOC above this high on a bull bar. It got close to getting above it, but they immediately sold off. So not bullish, even though they reclaimed this, which is like, I wasn't sure what to think about that. They did not reclaim this one, which was the biggest, slightly bigger. They did not reclaim this. In fact, it's resistance. Cool. Now watch, they come take it. Okay, so they reject. My guess is bearish, but we still need to get VPOC on a bear bar that's not purple below this. I know we did it the first time, and that was an aggressive sell right here. Right, because the big, I guess we didn't do that until here. I'm pretty sure you have to get behind it first to have that, because otherwise you're selling a breakdown, and that contextually that doesn't make sense to me. I mean, you could sell this, but wouldn't you sell, like, I don't know, like, where is support that's breaking down here? I'm not really sure why you would sell that breakdown. But I do think breaking under this, like that, can probably be sold. We mentioned that. But it's a scalp. It's not reverse the entire trend. So what usually happens is we come back up and we test it. And then they reject it. So I would think that's bearish. But we could not get a bear bar with a VPOC underneath this big delta bar. So does that make this bullish? Probably not, because we still have resistance. But it's maybe just not time to sell yet. Is this the biggest delta? Cool. Okay, nice. So they got a big delta here, which is great, because now we might be able to beat that and sell it. So let's see if they get stuck. Yep, they get stuck. Cool. That's great. So now you could aggressively sell, seeing the bigger time frame that this guy had a lot of delta, huge delta, had some success. We retraced him, couldn't get any volume developed above him. They tried to defend, which is natural, and now it's like ricocheting off. So old support, new resistance, can't get any bars up here that are bullish. And oh, interestingly, this bar here has less delta than the one here. And that's not going to cut it if you're fighting a big reversal. That's not enough. Oh, same here. Decreasing. Even the wick is lower than the previous close here on the high. This, like, doji has a lower wick, lower high than this. So the way to think about this, see, the hard part though is that you don't sell this. So even though you were decreasing in delta, it's not time to sell yet. It's just a high that's likely to hold. Okay. And then in this one, you could also say that you were divergent, because here you went to a lower low, but you didn't make lower deltas. So you got a retracement. Lower lows. They tried here, but then lower delta or higher deltas, less different. So Huh. And then that resulted in this level being defended, but it doesn't mean it's bullish. Okay. So this rejected. Note purple has low delta, which is normal. This one has more delta. And then this one has even more than that. So now they're gaining delta as they drop. That's bearish. Now it's a purple. Did they get under our big delta guy with a bear bar? Yes. So can I sell this? Or do I need a retrace? Okay. You could have here. You had VPOC flat. Okay. And then touch. Purple doesn't touch. The next, if you get a pullback, the next yellow dot is usually sellable. Not down here, but a pullback. So let's see. Oh, and then this was our biggest delta of this wave. So can I not get VPOC above this? Does that create problems? Yep, there's the yellow dot. So pullback, yellow dot. I'm probably selling that. Yay! Okay, cool. So those work together. So here, I got a big delta. I'm bearish. I can't get VPOC behind that. It doesn't mean that it's bullish if it does, because that happened here. It just means we're going to go to resistance, which may be very nearby. And then what happens there is going to be dependent on the higher time frame. So, okay, so before we go further, let's check and see what's happening on the 24 tick at the same exact time. Because this should be fractal if I'm right about the tendencies. That's the 67 tick. Here we go. Okay, 24 tick. How did we do going up? So here's the, where did they get stuck? Right here. So this guy, well, who's the highest delta? This one, right? Did we get behind him? Normally they want to retest this. Here, I'll move this. They go higher. Naturally, they did it in like a micro time frame, and then they did it on the bigger time frame to retest the VPOC. That's natural. It's not bearish. It's just normal. The low actually held. It's okay to trade under it, but we didn't put any VPOC under it. That's for sure. We actually got a purple bar, pink bar. Then this had all the delta at the support. That's healthy. They tried to fight back. They got trapped. See how they couldn't go any further? Blue dot goes higher. Oh, and then the reclaim of this. Didn't get behind it yet, but technically that's here. So I don't think you just buy it. I think once that's happened, as long as this is defended, you can buy aggressive signals. That's my guess. Okay, so, and then this was our biggest delta here, these two. We never even came back to test this one after that. So that alone is bullish. I don't know when you decide that, but eventually they probably will come back to test that. I think they did, eventually. Okay, let me erase the line so I don't get confused. All right, so this is the biggest delta. No, this one was the biggest delta to the downside. Started going down. They ran into support. Right here, they got above it. And so anybody who sold there is offsides. What's going to happen? Momentum's probably going to increase, and aggressive buyers like blue dots and stars, oops, you can't see this. Blue dots and stars can probably be bought because their sellers are trapped. The biggest sellers are trapped. There was another one back here. That was a big delta. Got behind it at the same time. So you don't have to buy this, but any aggressive signals after that look pretty good. And again, it'll take you to resistance. Where's resistance? Oh, we are there. So if you wanted to wait for resistance to hold, what would that look like? Right there, blue dot. So you get a test of resistance. They try to push. It's not very strong compared to the wicks, like we talked about, exactly the same as the 15 tick. And the result is push higher on bigger delta, which is what you want to buy. Okay, that pink got bigger. That's it. We need more delta now. That one was bigger. We need more delta. Okay, pink. We need a non-pink bar with more delta. There we go. So this one grew, and it had a wick. This one should have trapped somebody. Does that need to hold? Yeah, I was gonna say, I bet you they attacked that. Because we had low delta here. They tried to reverse it, and then they needed a lot of work to take that back. They attack it with huge delta. And we get blue dot because it's bullish. Oh, and the yellow arrow shows up too. And we beat it. That's probably a buy. Oh, look, these are all divergent. These are more sellers than buyers here. Do we have a higher high? No. Lower high. Is that dangerous? Nope. Just goes higher on a pink bar. Okay. Not what I would expect. Oh, they tried to beat it and then blue dot. Look, they got a wick, but not as far as here. Yeah, not surprised that they fight that back. They fight back against that. And so, and these are both gold. I wonder if that matters too. This one, the hammer that's gold with increasing delta gets attacked. Right there. Well, this one had decreasing delta. So that's divergent. That's worse. Better for sellers. Okay, big delta. Oh, is this the high? So there's divergence. Cool. So here they didn't have it. They tried to fight it anyway. Sellers need to, I guess, probably get down here with VPOC. They get a big seller here. So that has to hold. Okay, look, they tried to get under there. Blue dot. So, not ready. It's going to come back up here. Decreasing on pink is probably fine. Note that the star bar was a bigger high than the previous one, which could have potentially trapped buyers. But since it had more delta, I think it has a better chance of going to resistance. Oh, wow. So it gets stuck right there. Pink bar, star. Kind of low delta. I'm surprised that worked. That's probably bearish because they didn't need a lot of energy. Huh. And it's not pink. Or purple, I mean. See, this one's purple with low delta. And then they go lower with more delta. And that's actually what causes them to reverse because it was, see, it's still divergent compared to the big one. So the biggest one is here. This is the biggest delta. The price goes lower and delta decreases. They respond and then higher time frame response. Yep. And now they're done. Because this guy was bigger. Oh, maybe not. So the pink one? No. This one's the biggest. So for buyers to win now, if it gets under this, they have to get back over this with a bar that's not pink. Like this, but after testing under it, it looks like. Otherwise, this needs to hold. But the fact that this big delta up here is acting as resistance and we can't get anything up above it means that these guys are trapped. That's really what's going on. Okay. Increasing delta. So they probably don't need any more pullbacks. Oh yeah, it's even clearer on the 24 tick. There's less noise. So these divergent bars is basically where the consolidation was. They came back to test that out. And look at how different it is. It's like there were sellers here then, but we went higher. And then they come back and they're like, you guys still interested in selling? And they're like, hell yeah, we are. And they tried to fight back with really big delta. See that? Look at how big this delta is. Here's the biggest. This is bigger than that. So why do they need all this energy there on a pullback? Why do they need the star? Because people are trapped up here, right? Their target is here. Like, not a lot of people should be taking that trade. Like, you'd have to be on the shortest time frame to target resistance here. So the only other reason to do it is because they're trying to defend and reclaim these levels. So it's almost like seeing this big delta on this brief pullback is bearish if they can't retake this. And especially when it only lasts like one bar. And then the very next bar is like nothing. And then one bar. And the very next bar is purple. So if you're bearish, does a big delta followed by a purple bar, is that sellable? Can I just sell that? And then increasing on purple, increasing not purple. And then here's the divergence for a bar. And then see, this one's not as big as that. So they fight back. Okay. Big delta. They're trying to support this level, which was old resistance that they broke over. So they're trying to put in new support. It's the biggest delta we've seen. Where do bulls need to get? They need to beat this guy, or I guess more importantly, save this guy, the one with the big delta. So they're going to come up here. They need to get VPOC above 130 or 128 to have any chance of fighting for the high. They get a big delta, trap a couple people, decrease delta. Remember, when delta decreases against the trend, it's probably weakening. Yeah, because if delta decreases with the trend, it just means we're going to get a pullback. But now that delta is decreasing against momentum, oh, look where they look at that. Wow, is that, dude? That's cool. Okay, so building. Yeah. And this one is still not as big as this one. So they have room to like go further, because up at support or resistance, I mean, where they started this, they used a lot of energy, basically because they had so many buyers to fight. And now they're using more energy as we go lower, but nothing like this. So, in other words, we haven't even run into like the big order book like levels yet. So let's see what happens. So purple bar has less delta. That's totally normal. This is a big delta. Very big. 556. We'll probably get a retrace to here eventually. Ooh, wow. Very, very low. with a dot too and an arrow. Building again. Okay, so I'm guessing they're coming back to this, at least, if not that. That's what they want. But this little doji with divergence on a different time frame, that might also get retested. Let's see. Decreasing on a pink. Decreasing on a non-pink. But look, the wick went lower than this. So some sellers got trapped in here. It might actually continue higher. Yeah. Okay, cool. That's good to know. They got to come all the way back here. Well, they naturally want to. They need to get up here to reverse it. Oh, they can't even get into the bar. Look, the bar starts here. They can't even get into it. Okay. So just decreasing delta all the way through the retracement, meaning it's most likely bearish. And this is probably going to break the low. And you don't need a lot of volume here. So that's normal. Not a problem. We're going in the direction of the trend. All it'll take is one bar to like fix this. They don't need to retrace. There. Bigger delta than we've seen the whole time. Super healthy if you're bearish. Right into the breakdown. Boom. That is cool. Okay, so now the biggest delta's at the bottom. So we have to be careful if we're bearish, because if we'd have to retrace this, reclaim it, and see more delta come in. Otherwise, we're going to come back and test, I guess. Is it here? Maybe higher. Let's see. Yeah, see, it's not ready to go down yet because it's got the delta at the bottom. I'm thinking it's going to try to come up here again. Nope, it stops right here. Why was that level there? Oh, big buyer. And then was it also a level back here? Yeah. What was this? Big delta here. Big seller. Got retraced. Nice. So this guy, they lost it. He had a big delta at the time. It was big compared to all these other ones. And continued to be the biggest for a while. Price came back down there. It's got to get VPOC below it on a purple bar. And it can't. Sorry, a non-purple bar. That's bearish. So this non-purple bar that's bearish couldn't get it under. They did get the yellow line under it, but on a purple bar. Then it got bullish. And now we're above it. So it's going to probably come back to the high of that. Yep. Now they do it. Now it's bearish. Even on that bigger time frame. So we're probably going to support, which is here. Yes, that's cool. Okay, so here's the big buyer. So to be bullish, we need to reclaim him and get the yellow line above that on a non-pink bar. Note they did once again put a huge delta at the low, which is bearish if we continue, but vulnerable, right? Like here, that for at a breakdown, that's good for bears as long as they don't beat it. But then when they try to break down, where's that? They try to break down right there. They try to break down underneath support. They get plenty of delta and we beat it. Like, it's going to pause. They can't reclaim this big delta. Guess where it's going? This one was really big. Needs to get under it. Oh, that's right now. So as long as we get under this with a bear bar that's not purple, we need to get the yellow line below it. Then it's bearish. Oh, shoot. I missed a call. Hold on. Okay. All right. So let's just see. Because that, out of all the things that I've seen with this tool, that reclaim is pretty neat. And like I said, I think when it doesn't happen, like they try and it fails, that may also be an entry if you're with the trend. So, like a green one here, if we're bearish. Here, let's do it on. Let's try it on the smaller time frame, because the same kind of thing should have happened. So, big seller at the low needs to get reclaimed by a sell bar, and then it should be bearish. Green one would need to get under it and reclaim it, and if they can't, it's probably bearish. But yeah, see how they got a ton of delta into the low? On a short-term perspective, unless you're breaking underneath support, like that was a little bit late for that. They can beat that, and if they do, if they get above it, you'll retrace back to, it looks like, back to a point where you had another big delta player. Like, whoops, like that. This one was from the higher time frame. So like, oh wait, that's not it. Where's the big delta? This one is big delta. So they'd have to reclaim that. Get under it. Reclaim it. It doesn't have to be the very big one, because that would mean, so this is not bigger than this. So once you put the bigger one in, does that invalidate that? Because this looks like we got under it, we reclaimed it on this time frame. That didn't work on the 24, but here, I mean, it didn't set up, but here it looks like we've gotten above this bar and reclaimed it. Oh, but we said it'll only go to resistance. So this one, before these, what was the big one? Way up here. And the purple one? Okay, so this one had a lot of delta. Is that where they get stuck? Nope. Didn't even get there. What did they get stuck on? Is there a bigger green one I'm missing? Let's see. Or do I have it marked wrong? So there's this one, which we got underneath it. We reclaimed it. Perhaps it has to hold. You know what? On the smaller time frame, I bet it has to hold on the pullback. Not only does it have to get this, it has to do that. I bet you anything. That's how it works. That makes sense. And so the entry is not getting beyond it and reclaiming it. So like here, you wouldn't sell the breakdown here when we reclaim this guy. If we reclaim it, you then would wait, and if they hold that and go lower, then you sell it. Let me just double check that on this way down. Okay, so there's so many more bars on the 15 tick. Hard to tell where I am. Okay, so this one was purple and had a big delta, but I think this one was more. 195, 193. Nope, the purple is the biggest. You immediately beat it, which is bullish on the tiny time frame. Getting it above it, like right here, you could probably scalp long. The problem is that you're going to get stuck right here because you have a trapped buy. But that's at least 1-to-1. Yep. Look at that. Okay. And so you didn't reclaim it. So you can immediately enter. If you do reclaim something, but you got to beat it first. Let's see. Which one is the one that got reclaimed? Big seller. This one? Did this one get beat? That one never got beat. So that just got rejected. And that is aggressive but good. What about over here? What's the biggest one? Is it this? I think it was this one. So that first attempt we talked about, that failed. Again, when it fails, you can probably enter with the trend. Here or here. I don't mind that. But, and then here, see how they can't reclaim it? And then you get blue dot, star, triangle up, long. But if they do reclaim it, which happens here, you don't short this. You need to see this hold. Boom. That's it. Yes. Okay. Oh, this is exciting. That's cool. That's really cool. I can't wait to try this some other spots. Okay, so here it's a little complicated, but I think I get it. I'm honestly gonna have to go back and watch this again. So big delta, get behind it, reclaim it, get VPOC under it on a non-pink or purple bar that closes in the same direction as the trapped delta. So get this, then pull back, defend, short. That seems to work. And then the other one, if it's trending like it is, if you have a green one that tries to reclaim and fails. So green tries to reclaim. Oh, that one does. That's a long based on this. Oh, wait, maybe not. Got under to reclaim it to get above it. I'm wrong. There is where it's reclaimed. So not yet here. Unless you thought it was bullish. But yeah, you don't want to long that. You would long if this holds. Which it doesn't. So can you short this? That's what I'm wondering. Probably. Let me go to like a random spot. Here, you know what? Let's go to a random spot on a 40 tick. No idea if it'll work, but let's check. All right, so here's like a high. So the big deltas on the 40 tick. This one's pretty big to the long side. So is this. This one's big on the sell side. Right? So for this one, that one's going to trigger first. We need to get behind it, which happens here. Then we need to reclaim it with VPOC. Oh, it's very close. Did it? Yes. Now we need to hold on a pullback and go, cool, okay. And then for the green ones, it would be lose it, reclaim it. Lost it, can't reclaim it. Lost it, can't reclaim it with VPOC. Can't get under it, can't get over it. Lost it, rejected. I don't know which one of these you can sell, but it looks to me that all of the stars work and all the yellow more or less works, primarily at the top. This one, didn't lose it yet. Lost it. And it just goes. So never got a chance to retrace. But you could probably sell that. Okay, cool. Seems to work here. And then Big Bear, retrace, VPOC, reject, breakdown. This is the biggest, the green. Does that get lost? Purple, right there, lost. Can we reclaim it? Oh, we got a bigger one. Lost. Pink, reclaimed. This one's reclaimed. I'd prefer to get a pullback. Otherwise, we can reclaim this one and pull back. Pull back. It's got a hold. Right there. See how I can't get VPOC below it on a bear bar? Dude, that's cool. Okay, so now this one is still resistance. So just because you reclaim this one doesn't mean you reclaim this one. This one you got reclaimed. It went to resistance. That's all it's supposed to do. Now we have to get up here to technically reclaim that. They hold again. They hold again. That's probably your entry. Second opportunity. There. Reclaimed. Now we want to pull back. Pull back. Does not hold. You might have gotten a stop here if you tried to take it off the top. Would there be any reason not to take this? Well, first of all, you don't get a triangle coming after your aggressive bar. The triangle shows that you got some follow through, which is always a good sign. Oh, you have a big delta up here. Look at that. So this, right at the top, is resistance. And that's exactly where you get stuck. Okay. And that's still the biggest of all the sellers, even now. Is way up there. So this was a buyer. And this was a buyer. That one's going to be tough because it's got a big seller right above it. Wow. I could see that being a problem for buyers. And see here, the volume zone oscillator does show you that like the bears are going to have an easier time here. This one is pretty big too. I'd prefer to see this one taken out and reclaimed if I want to be bullish. Because look, that's like the biggest one all day. And then this one's right above it. Huh. So technically, you could get under this, but then you'd have to reclaim all the way up to here. I just doubt that happens. Oh, that's right. We don't reopen for like another hour. I was like, wow, it hasn't really moved much. Okay. Well, this has gone almost 2.5 hours, so I'm going to cut it here. But I do think there's something to learn from here. I'm going to have to play with it some more, see what else I can do with it. But I think the reclaim for sure works. And then watching for divergence, I know like seeing this on a retrace can give you really good continuation entries.
And then just being aware that, like, if you have big delta coming in at the lows and then you get over that delta like this, you can probably get a scalp to the upside. And then vice versa, if rather than divergent, you get this, where you go all the way up and the very top one gets all the volume, delta, and then you get under it, you probably have a scalp to the downside. I mean, if you just focused on just these things, yeah, I'd be surprised if you. I don't know. I'm not going to say anything because I don't have the back test yet, but I will, and I'm looking forward to practicing this some more so I can integrate it. Like I said, I made money today, but it was in the evals, so I don't have it perfected enough with the like execution. I'm not confident that like I'm doing it right, so not quite ready to put this trade into the stable of trades I'll take with real money, but it looks like it's going that direction. Now that I see what works the best, and like I said, I'm still not totally sure like how long these like trigger points last, and if like putting in more volume or more delta or breaking through support or resistance, like something obviously makes them not like valid anymore, and I don't yet know what that is. So it'll take more studying, and honestly what I find is it takes losing, and once I've done everything right but taken losses, that information that day where like it quote unquote stopped working, that is super valuable information, because what something in there most likely is a filter to avoid in the future, assuming you executed everything right and it wasn't like variance. But with something that works this often, assuming you're doing it right and you only take the trades when it says to take it, and you know where to target based on like support and resistance and the profile and stuff like that, like it's hard to imagine that you wouldn't be profitable over time if you kept doing it. Obviously there's going to be days with variance that you're just going to lose, but like I said, those days as well probably have some variables that you might be able to measure and filter out in the future. You're never going to have anything perfect, but the way this looks, I wouldn't be shocked if there was, through some filtering and stuff and some more testing, it might achieve something like a 70%, but I don't know. Obviously, past performance is not indicative of future performance. I'm not recommending anyone buy anything or go, short futures or anything. It's dangerous to trade with real money. You can lose a lot of money, all that stuff, right? But talk to your financial advisor. I'm not licensed. But as far as what I'm going to do, I'm planning on studying this some more, continue to practice with these evaluations from Apex. If you guys want an Apex evaluation, check out the what's it called? The comments or whatever in the video, and you can get a coupon code. And you can always contact me on Twitter if you want to learn more about the algo or coaching with Simon, who's, like I said, the one who came up with this. Yeah, give me an email. Let him know you appreciate the video and just wanted to check out the room, and he'll give you a week or so to see what's up and give you a phone call and decide whether or not it's a good fit for you. So I hope to see all you guys soon, and thanks for sticking to the end of this. I know it was long. Like I said, hopefully it was helpful.